Hey guys, welcome back to Market Mastery. We're just going to do a quick run through of what's going on in the charts at the moment because we are sort of at a little bit of an inflection point, which potentially could be a local high. And, we're coming into the seasonality part where, everyone says selling May, walk away, etc. And there is a specific reason for that, which we'll go through in the video. So we're just going to have a look at what's going on with the seasonality right now. Are we going to break out and push up to our 83 and then 100K targets? Or, we're more likely to spend the next couple of months in a sideways range until potentially Q3 when we usually start to see the market take off, September, October. So without further ado, let's jump in and take a look. All right, so probably the most important thing to talk about right now is on Bitcoin's monthly. So really important monthly close after we came back and, kind of bounced off these last two previous monthly all-time highs and had a pretty nice bounce in there. So at the moment, we're just range bound after a pretty extensive run. Pretty much what started in October was when we sort of broke out and ran all the way until the end of March, right? Which is a pretty typical move. That's kind of like this season for the markets, all markets, not just crypto markets, to make a move. And then we kind of spend the middle months of the year going sideways. And the reason for that is seasonality, because everybody in the US goes away on holidays. So there's typically less action. Market makers sort of turn on their range bound algos and send us into a sideways range while everybody's away on holidays. And then, they sort of come back. A lot of times we can get a dip down because they come out of holidays in August. Then we have a bit of a dip down sometimes in September, and then October is typically when the market starts to get a little bit excited again. They get that Santa Claus rally, and then we typically push into the later parts of Q2. Okay, so which is sort of where we're finishing up right now. We're starting to get into the kind of periods where we're pushing, towards the end of our Q2 period. And, those middle months of the year is really where we spend a lot of sideways action. If we go and look at the last year, I'll just show you where we were last year. And obviously this is a bit of a different timing of the cycle as well, but we spent 213 days going sideways, and that was pretty much from about the 18th of March all the way until the 17th of October. So, it's a big chunk of the year. We had one good move, which was in the middle of June. It was about a 20% rally up to the previous highs, right? So we can always get a nice move inside the range or potentially even make a new high and then roll back over again. So just sort of have to wait and see how things play out. But I'm just going to jump back to my main chart 1 second because we're just on the index at the moment. So there's a few things obviously going on here at the moment. We had these falling wedge targets, that played out really nice. And, we had that lower time frame price action play out on the high time frame on the daily, which we always look for with our high probability order block setup, which is when you sweep the local lows and then you come back and you retest that order block before heading higher. So that was pretty much a perfect setup. And, a lot of us nailed this trade. The other thing as well, if we just turn on our long-term VWAP charts. Oh, I don't have it on here for some reason. On this one, if we turn on our long-term VWAP charts, we just jump to the daily. We had a really important level running through here as well at the developing yearly VWAP. Okay, so we had that TD9 perfectly on the daily time frame, perfectly bouncing off our yearly VWAP, and then we got the Morningstar reversal, which really set us up perfectly to break out of this falling wedge. And I think a lot of us nailed that trade pretty nice. So I did update multiple times, across all the groups. So if you didn't catch that one, it's not my fault. You can only have yourself to blame because I made it pretty clear, my positioning, all the reasons why. There were also some pretty key important macroeconomic factors with FOMC. And then also we had that unemployment data as well. So the next important macroeconomic date coming up is going to be in about a week and a half. We're going to have CPI, which is always in the middle of the month. So that'll be interesting. And I need to check these, a new FOMC coming up fairly soon as well. So we'll check in on that also. But I don't think that, there's going to be many macroeconomic factors coming up which are really going to affect the price chart here. I think the most important thing right now is can we hold this daily order block through here? And is that going to continue to support price for a move to retest the range high order block, which has been keeping price down, right? I'm just going to make this one red so you guys can all tell that it's resistance. But this is basically the level that I'm looking to see break. And one thing that we need to watch out for is a potential breakout like this, and then sweep of the highs, then coming back into the range, and then seeing us bleed all the way back down to the bottom, right? So that would definitely be a pretty nice short setup or hedge situation if we do have a failed breakout, something like this, right? And then we come back in below the range quite fast. Anything, any sort of pin bars off, the top of this order block or the bottom of this order block, anything like that, with big wicks going back above after reclaiming the range high, that would be pretty nice short entries and be looking to hedge on those. So that would be a really nice or easy way to sort of get into a position for a rollover back down to probably retest the 58K yearly VWAP, right? So that is one thing that we have to watch out for. Of course, this, maybe the Ethereum ETFs finally get approved or something like that, and we end up getting the breakout here, and then we get the proper approval of the S1s of the Ethereum ETF, and then ends up pushing us up to our 83K fib targets, because we do have those two Fibonacci targets for macro fibs, right, which is the 1.272, and then also the 0.272, which is just the move from here to here. So I'm just mapping out this move right here. If I can get a line, God, trading views, super annoying that they always move everything around. But this is the move here that we're tracking. So that's the target for the 0.272. And then the macro fib is the 1.272. And that's just a Fibonacci that's running the entire market cycle. Okay. So those levels are going to be important. And then if we do finally get out of this range, which to be honest, it's looking like we could easily be in this range until sometime like late August, even September, October. If we go back and look at this range that we're in last year around the same time frame, right? This is about 211 days, right? So that's definitely something to think about, that we could, if we're going to be in this range for the same amount of time, 211 days, right? That ends up taking us to the end of September, right? Literally end of September, 1st of October would be an exact 211 days, right? So we cannot just sit here and be like, yeah, the market's bullish. Okay, we've had a falling wedge here. This is definitely going to, break out and run into price discovery out of nowhere, right? We actually have to see that price action confirm. Otherwise, I think it's probably a bit safer, especially considering the seasonality, which is what I was talking about earlier in the video, the seasonality, which is, selling may go away. Like everybody's away on holidays in the US over the next couple of months, and usually June is a pretty flat month for crypto in general. So we're just going to have to wait and see. Like, just because things have happened in previous cycles doesn't mean it's going to happen in this cycle. We can always go back and see what the market was doing in previous years as well. But if we go and look, at the last cycle when we had the previous halving, which is around this period, sometimes through here, we had the last halving. And so it's probably the best time to equate to what we're going through right now. We had a range through here, which was pretty much sideways for about 84 days. And then we had a nice run in the middle of July. Sorry, I should say the back end of July. It sort of started ticking off, and we had the breakout 27th of July, then, more sideways range, but it didn't really take off again until October. So, the high that we were sort of back in here at the start of this range, we sort of went sideways for 150 days all the way until October. So that's once again, if you want to take from this range to the end of this range here, that's kind of like the start of May, pretty much until mid-October, when we started to move off again, that we're in a pretty tight range. Like, yeah, there was a little bit of a move up, about a 40% move up, but then obviously we had that deeper pullback, but we were sort of in that range again for that middle year period, that seasonality period, which was pretty much the start of May until October, when the market is typically moving sideways. And obviously that's around the halving year as well, which is pretty accurate to what we're looking at right now in terms of where we are in the cycle, right? So just cannot rule out that we're going to end up just going sideways here until October again. Which would end up being perfectly matching up with the sideways range that we were in last year. So just something to think about anyway. And, we might need to be looking at more rotation plays in altcoins and stuff like that, to capitalize on, the movement over the next couple of months. If Ethereum does, get its S1s approved, which is probably highly likely over the next couple of weeks or months, then, I think we're probably going to see a little bit of outperformance on Ethereum and see a little bit of outperformance on, those Ethereum alts that are really closely correlated to Ethereum. So things like LDO, which has been performing really well lately. Arbitrum probably do really well. And the rest of that, tight ETH ecosystem, maybe even a little bit more high risk plays like Illuvium and stuff like that. Could start to get some love towards the back end of a Ethereum move as well. But at the end of the day, everything is just going to follow Bitcoin anyway. So, we'll just have to wait and see how this ends up playing out. The market is definitely shifting a little bit more bearish at the moment. And, the main reasons for that is this weekly time frame close is pretty gross, to be honest. That's definitely a short type setup. We did have the weekly TD9 come in over here. So, that is basically a weekly order block that we need to, be looking at, and we can see that every time price is coming back into this weekly TD9, we are getting solid rejections. So for me to really consider strong continuation to the upside is ready to trigger, I would want to see a close above this order block, which is pretty much $71,400, right? So a close above that would be really nice. I'm just going to quickly adjust this. It's on the weekly, but a close above, on the weekly close above this TD9 on the weekly here, which would be a weekly close above 71,300 or 71,400. That would signal to me that the market is ready for continuation. The weekly chart at the moment, to be honest, looks like we've had a break in. We've tested the developing yearly VWAP and we've bounced off that. And we're coming up and we're retesting the developing yearly value area high and failing to break out of that, right? So if you've done Market Mastery 3, you will know that this is a setup that we call the inside break setup. So one of the things that we need to watch out for is a rollover here back to the developing yearly VWAP and see if we get a double bottom down there. If this fails to break out here after the initial bounce here, okay? So we do have a pretty high time frame inside break set up here at the moment. And if that played out perfectly, you would see something like this. And then we have to wait and see what the reaction is to the VWAP and see if we end up taking off from there. And that would give us, pretty much the perfect amount of cycle timing for this yearly pause that the market does like to go through, right? And that would make a lot of sense to me. A rotation back down, maybe even wicks below, this monthly all-time high, and also where we put the range low here on the daily and the weeklies and just get those wicks down, a little bit shorter time frame testing down to the developing yearly VWAP, which is going to be somewhere around that 58K area. So I could definitely see that happening. Some traders are definitely saying that we need to come down and retest this imbalance from the last push out that we had before the market took off. So that would be an even deeper retrace and pullback to come down and sort of retest this 52K area. So we can't rule that out either because, it's definitely a pretty nice key level as well. And, that 55K level as well from that is the previous year, which is the year 2022, a value area high through there as well. So, price might come down, wick into this area here, and then hold above that level, and then we get a reversal off it. And that's just going to end up looking like a really nice, let's say we do something like this, then come back down around, chop out, bleed out, come back down, maybe do something like this, and then we sort of take off again. And that takes us, that would be the perfect timing band for, have that big sideways range and build that strong base in the middle of the year like we usually see before we take off for, the next expansion move up during the peak pump time for the market, which is October all the way through to the end of April. Okay. So that would actually match up perfectly with what we saw last cycle. Sorry, I shouldn't say last cycle, last year. And, we do have that rotation back down for that double bottom, which would be very, very similar setup to what we saw back here. So can't rule that out at all. And if anybody, gun to my head, that I would say that is probably most likely what the outcome would be for the next 3-4 months. Okay. So gun to my head, because everybody wants to know, oh, but what exactly are you going to do? Right. So most likely I'm thinking we're just going to chop sideways in this range and bore everyone to death. Same thing that we did last year, unless something crazy happens and they decide they're going to start dropping interest rates early, which could happen. We don't know what they're going to do in the next FOMC, which I'm pretty sure next FOMC is in July. They could decide to drop interest rates randomly. Or something happens with CPI, that can always affect things as well. And then obviously regulatory issues, things around what the Biden White House is doing, because they're flip-flopping pretty aggressively on things at the moment as well, with we have their regulatory stance, if they're going to support crypto or if they're going to go against it. And so, we have to take those things into account as well. And I think probably the biggest randomized factor that we need to watch out for is something happening with the Ethereum ETFs getting their S1 approvals, which mean they're going to be actually approved to be able to open and trade. So that could definitely spark something in the market. But I wouldn't be surprised if, on the S1 approvals, if we get a bit of a pump, something like this from BTC, and we make a new high, everyone gets super excited. And then the Ethereum ETFs end up performing really poorly. And in fact, we see massive outflows from Grayscale, from ETH, because I think there's a massive build up there as well. And it actually causes quite a large sell off in Ethereum. And everyone goes, oh, maybe ETH ETFs aren't going to be all they're cracked up to be, and actually creates a little bit of negativity in the market. And we end up just bleeding out for a while until those ETH ETFs start to sort of flip positive, and then we sort of get that nice double bottom. And there's also the timing cycle of the market being ready to pump again. So just need to be careful not to be too bullish up here. I know this was an amazing entry and great trade rotation here for that 21%. We need to also be making sure that we're locking in some of those gains from that trade. But also, you can't argue that this isn't, on the daily time frame, a really bullish look right now. So I wouldn't be surprised if this ends up breaking out to the upside and then we fail and roll over, and then we get that retest, right, back inside the developing yearly value area high, and then roll over again from there. So that's what I'm kind of watching for here. We've got a couple of really key levels through here. Obviously that weekly order block at the daily range high. So just watching, what the weekly closes are doing, watching what the daily closes are doing. The daily, to me, actually looks pretty bullish here. So I could see maybe a push up and then a roll back over for sure. Or potentially, this is just ready to go, and everyone's sort of just getting way too bearish because we had an ugly looking weekly. I need to also add in that the monthly close was pretty strong a couple of days ago as well, so we can't just leave that off the table. So at the moment it is actually quite difficult to make decisions based around what's happening on the chart, because there's a lot of high time frame things that are bullish, and there's a lot of high time frame things that are bearish. And that's why it's really difficult. That's why trading is difficult sometimes. And so what I try to do in these type of situations, I try to put myself in a position where I can capitalize going either way. So because you have to understand, like, a lot of trading is psychological, and putting yourself into a position where you're happy if the market goes up, or you're also happy if the market goes down, right? So it's sort of like psychologically hedging yourself, right? So that you're not going to panic if the market does roll over and come down here. You're not going to be 100% all in, and then you panic because we're breaking to new lows below this level through here, and then you dump everything into the low because you didn't sell any at the top, right? So when you're pushing into range highs like this, and it's like, oh, we're getting into a bad time seasonality, but there's no real short setup at the moment. I mean, obviously you could just be like looking at this and be like, okay, that's a weekly short setup, right? The only issue is that this could end up rejecting the shooting star reversal and close somewhere up here, which then if I was going to sell this shooting star reversal expecting a sell off, and the bulls rejected that shooting star, I would just add those positions back in. So let's just say I was like, okay, I'm going to take off a few altcoins like Solana or something like that. Maybe a few higher risk that have been performing really well, like Ondo, etc. Right, mate, take some profit on some of those. But then if the bulls do reject this shooting star reversal, then I might add those back in. Now, if we do get a sweep of some of these highs on the next weekly and we get something like that and then come back into it, then I would most likely offload a little bit more. I can also buy some put options as well, and that would sort of put me in a position to be able to sell Bitcoin. So maybe I could be like, okay, I want to be able to have the option in a month or two to sell Bitcoin at 68K, and then that will give me the protection to be able to sell a couple of BTC around these levels at the value area high, right? So that's basically just a few different options you can take. But I think it's important in situations like this to be in a position to protect yourself psychologically. So if we do roll over, you have some USD capital, you have some shorts on that are hedging, or you have some options that you can cash in, and then you can use that capital to rebuy the lows, right? Because you don't want to be getting into a position where we went all in. So for example, for me, when I got this set up down here, I pretty much went 100% all in. Like I don't really have any capital left on the sidelines at the moment. I just loaded up really heavy on things like Ondo, I loaded up really heavy on things like Solana, and I loaded up really heavily on Bitcoin. And obviously that trade has played out really nicely. So now I'm looking at this and being like, okay, we're in the middle of the year. What do I sort of need to focus on right now? Because I know typically in the middle of the year, we're more likely to be in a sideways range, and this could easily roll all the way back over. And I want to take advantage of some of that, 20, 22%, that I've made in this swing here, right? Obviously, I did have some leverage trades, which I've already taken profit on as well. But, a majority of what I trade with these days is spot anyway, right? So I want to be able to take advantage of those gains that I've made, especially on other coins like Solana as well, which let's just go have a look at quickly. We loaded up on Solana down here pretty heavily, and that's had a really nice move, but, a 45% move, but it has had a decent pullback, right? So only about 25, 27% up on that, and just need to watch to see, is it going to actually be able to hold these range lows here, right? And hold the range high here from the inverse head and shoulders, right? So, that is a pretty sorry sort of bleed out. Is it actually a falling wedge that's going to end up breaking out to the upside? That's the question we need to ask. But if we start to drop below this 158 level, I'm going to start to flip pretty bearish on Solana, because I would expect if we drop the inverse head and shoulders neckline, I'm going to be looking back down around this 0.618 area, around 130 again for, double bottom type action. Let's just say something like that happens, and then, Solana goes into a bigger range, and then, later on in the year, this ends up breaking out when Bitcoin does and pushes to new all-time highs. And then, we would have that. We'd be looking for a swing trade to try and pick it up somewhere again, back down here around that 130 level, and be looking for a rotation play up to about 260 with BTC pushing to the upside as well. But like BTC is in that symmetrical triangle, you can't rule out that potentially this is just a little bit of a bleed out after a really nice move. And one thing that we do see a lot is inverse head and shoulders break out into a falling wedge retest of the neckline, and then that falling wedge breaks out to the upside, and it just launches from there, right? So there's definitely a possibility that we could see a breakdown here, right? Retest and reclaim. That would be the perfect type of setup for me, to be honest. We are starting to get into the oversold area on our, not our RSI, but onto some of our other levels, like our cipher indicator, and also our stochastics RSI is getting pretty down. So definitely due for a little bit of a swing high coming in here soon on Solana for sure. So I could easily see Bitcoin have another push soon if we break out to the upside on that symmetrical triangle, and Solana as well breaking out to upside here and maybe retesting this 200 level before both of them end up rolling back over, right? So that would probably be my most bullish case and idea for a lot of coins, to do something like this, sweep the highs and then roll back over. And if that happened, I could see Solana do something pretty similar, right? Do something like this and then pushes up with BTC and then fail, break down, then we roll back over, and then it ends up taking a few more months before the next push, right? So that is something that we need to keep our eye on. That is for sure. So that pretty much wraps up my analysis on BTC, to be honest. right? If we just go and have a look at the monthly, we were talking about that before. The monthly has had a really nice close here, but we are getting our TD9. So, if you're watching my Instagram video earlier, I was talking about these TD9s and what it actually means. So, on the daily time frame, right, when we have our TD9s show up, it's usually a pretty strong sign of reversal, but it can also be a continuation trigger if you then get a close above the nine, right? So here is our last nine, which we nailed the trade off, right? Which was a reversal nine. Right, this was a nine in the middle of a strong push, right? And that ended up sort of, giving us the trigger that, this range was about to start, right? We ended up getting a little bit of a push and it tried to continue on afterwards, but failed and came back below the wick of the nine pretty quickly, only maybe like a week above it, right? This nine here basically killed the run before we went into a sideways consolidation. Once we got a close above that nine, that was when, we really went to that strong continuation. So, we sort of had a nine break, continuation nine, and then this sort of like set us up for the sideways, right? This is obviously a nice reversal nine back here as well. Obviously, reversal nine here also. This was basically a pause nine, which put us into the sideways range, but also, it was a nine that showed us that the impulsiveness was coming to an end. Right. Once we sort of got clean above it, we got a nice support resistance flip before we rallied up into that pause nine. So we have seen them, this one basically was nothing. They don't 100% always mean that something radical is about to happen, but, it's pretty high strike rate that they're going to have something is going to happen on the chart, right? So this one was sort of just like bleeding going sideways and it just ended up being nothing, right? Market just continued bleeding sideways. But what was happening, that was the middle of the year, right? The seasonality, the middle of June until the middle of August. Pretty dead time in the markets, right? And also we have to remember that this was the first year of the start of the first year of the cycle. We're in year two of the cycle now, which is typically the reaccumulation. So it's a little bit more bullish. We might see a little bit more volatility, but we're not sort of getting into the back end of the cycle, right, which is that year three, which is where we get really into the bull market, right? So the post halving, this is still pre-halving price action, right? And then back here, this was a continuation nine when we came out of the lows, right? So we pushed up, pretty nice little grind up, had the nine, next candle closed very strong, and then bang, really strong continuation push just then. And that was the move that took us out of the bear market, okay? Really nice reversal nine back here as well into a nine that paused there as well. So if you want to get access to this indicator, join our Discord or click some of the links below, because it is one of our indicators that our in-house developer has set up, and it's pretty handy, especially for just nailing amazing trades on the daily time frame, right? And so we had one of those here on the weekly, which put the top in the market as well, right? I don't really take trades off them that much on the weekly, but it is sort of important to know what's going on. So now let's get to what I was really talking about, which is this monthly nine that we're starting to get here, right? So let's go back and look at previous cycles when we got those nine triggers start to come in. So last cycle, this was the first nine trigger that we got just after. It was literally the breakout from all-time high was the nine candle. And then that was basically what sent us into price discovery front, 121% move, pretty much into the all-time highs for last cycle, right? So I'm going to have to quickly jump across to a different chart. 1 second. And then we're going to have to jump on log because we're going back so far. But let's go and have a look at the rest of the cycle. So that was the last one just there. And then if we go and have a look at the 2017 run, so the bear market here was June 2015. Then we broke out, and just before, it was actually right around the timing, just before, sorry, the halving. Maybe 1 or 2 months before the halving, end up getting a really nice monthly nine here. And we ended up flipping the wick of that nine, ended up holding as support. And then we based out there for a couple of months, right? So post halving, this is sort of middle of the year as well, guys. Talking about that seasonality type thing, middle of the year, sort of, May all the way through to October again, 153 days. We're going sideways. We finally break out of that. And then that's when we start and we go on that 2000% run, which, made the end of 2016 and 2017 just probably the biggest bull run in history for a major asset, right? And that was what put Bitcoin on the map. So just something to think about here with the sideways range and that really big push after the 9. We're sort of getting that same type of price action again, right around the halving, right in the middle of the year again. We're getting that 9. So, I'm just sort of feeling that, this could be a little bit of a signal that, we're going to go sideways for a few more months and then have that really big takeoff and breakout properly from the all-time highs into price discovery when we get into October again. So like if we look at when the market really took off, right, the breakout in 2020, which is the post halving year as well, that happened in October. The breakout here, when we started pushing to new highs again, that which was also the post halving year, so that was 4 years, right, full 4 year cycle. So the year of the halving, which is what we're looking at here, that was also an October breakout with middle of the year consolidation, which was when we started that really big run. Okay. And then if we go and look at the same thing again, a little bit different now, but around the all-time highs, once again, we're having our TD9 candle, which takes us up to the all-time highs. And then that gets us the first monthly close higher, right above the wick, and then we have the continuation pump. And this was the 2012 bear market into the bull market of 2013, right? And post TD9, we had that was a 3,400% rally, right? So if we want to go back further into the cycle previously, there was no all-time high, but we did have a really big fluctuation in the price from 20 cents down to 1 cent and then bounced off that. But it was the monthly TD9 that you can then see moved into really strong price action for a 12,000% move. But that's going back so far. I don't really like to look, all the way back there because market dynamics were so much different. But still, the main thing to look at here is every time we get that monthly TD9 around the previous all-time highs, the market then usually starts to move into price discovery, right? Obviously, things are a little bit different, but I wouldn't be surprised if we ended up getting something similar to this. We've got the 9 somewhere in our middle of the year consolidation pattern, and then we sort of get that breakout towards the October month, right? It's what we did the last couple of cycles as well before we start to take off and break out. So something to think about anyway, guys. That is the main thing I'm watching right now. Hopefully that all makes sense. So probably the next most important thing to talk about is Ethereum and the ETH BTC chart. So as you can see, Ethereum is still struggling to break this downtrend. It would be a real tragedy for ETH if this just rolls over one more time. I wouldn't be surprised at that if that does end up happening because Ethereum just always seems to cop it for the last few years anyway. It does have a nice little rally every now and then and finally flips bullish, but that usually happens after Bitcoin pushes to new all-time highs. We could end up seeing sort of something similar to what happened last year, last cycle, which is, a nice impulsive move up after, ETH had been copping it for a couple of years straight. If we go and look at it, the time of the halving, I'm pretty sure halving was somewhere around, somewhere in this area here in this consolidation. I'm pretty sure it was sometime in May. And then that was when Ethereum outperformed for a little bit, but then Bitcoin started moving really aggressively. Bitcoin took back over and Ethereum had a pretty deep 43% sell off compared to Bitcoin. But then it finally took over and it had a really big outperformance for about 150 days, right? So wouldn't be surprised if, the S1's get approved. Ethereum has, some sort of a nice rally against BTC, comes up here, then chops around sideways while Bitcoin takes over again. And then it has, its next move up a bit later in the cycle. Okay. A few things just to think about there and how you want to play your rotations. So obviously, altcoins are all just going to follow whatever Bitcoin does. So hopefully we do get at least one or two more bullish pushes and we don't just roll straight over, because that would be kind of depressing to just roll straight over into a grind down into much lower. So that's what I'm mainly watching right now. Probably the other coin that we've been trading a lot recently is Ondo, which has just looked really strong. And I posted this on Instagram and also, in Discord and everywhere else, Facebook. to alert you guys that this is one of the strongest looking charts around. And, since then, price is up about 60%. So the entry trigger that I was talking about was back here. And that was just after this strong close through this nice consolidation pattern looked like it was getting ready to go. So that has been a really nice trade. So we've come up and we've hit our Fibonacci target. It's struggling to get out from there at the 0.618. I never like to sell the winners, but if Bitcoin does start to give me some pretty bearish price action, like fakes out the range high and then comes back below it, then yeah, I'll probably look to take some off this because, I wouldn't be surprised if it did have a bit of a throwback, because usually when you have a nice push like this into a sideways range and then it pumps again, the next throwback after that sideways range is usually really sharp. So a lot of the time, you'll see this pump, sideways action, and then really strong move again. And then the next pullback is really sharp and then bounce off. So I'm just going to try and catch that rotation play to sell a little bit off when I think the market is getting quite bearish again. And we're going to have a throwback on Bitcoin and, sell off and then try and recatch Ondo back around the top around $1, because it sort of makes sense for, maybe even pushes up to here, then you have a big pullback. If we do push up to the 1-to-1 target, I would probably try and catch this order block through here at about $1.30. Sorry, I should say $1.20, $1.25. But if it ends up topping out here and Bitcoin ends up being a little bit more bearish, right, it does something like this, I probably would be looking to get the rebuy at around 96 cents. And it ends up looking something like that. All right, that's pretty much it for today, guys. Thanks a lot for tuning in. If you want to learn more about our strategies and how we've been nailing all these trades, I've been doing this for the last 8 years. You can learn from myself and my business partner, Chris, in our Market Mastery course. Links for all that are below. There is a free webinar as well through there, which I basically run you through everything in our course. I actually offer a whole heap of value around our strategies and teach you a lot of things in there as well. If you want to learn from us, go and watch that video. You'll get a massive amount of value just from watching it. So click those links below and maybe I'll see you inside our Discord. Thanks a lot, guys. Chat soon.